What's up, guys? Welcome to Roensch Capital Charts. In this video, we're going to be taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames for April 2024. Now, we're going to look at this on the 4-hour, the daily, and the weekly, and we're going to utilize self-fulfilling prophecy psychological areas of interest that I expect we will see a lot of decision-making around, as well as the options bias. Anything that we can pull out of the options bias, perhaps the volume profile, to understand this stock to the best of our ability here. Now let's get started here on the very popular, extremely heavily watched 4-hour chart. You can see that I have only the two most popular indicators you could possibly put on a chart, the 50 period and the 200 period moving averages, because again, we need to look at this with that self-fulfilling prophecy psychological mentality. So let's take a look here. First of all, if you haven't already, please, I appreciate you subscribing to the channel. My goal here is 10,000 by the end of April, so I appreciate it, and let's take a look. Now, specific to the 4-hour chart, I want to pay close attention here throughout heading into and throughout the entirety of the month of April to, again, the self-fulfilling prophecy moving averages, so that 200 period and the 50 period. You can see that we currently find ourselves right about halfway in between those that now forming channel. Now, by the time you're getting around to this video, things are likely looking a little bit different. Bulls. Specific to the 4-hour chart, here's what I'm looking for and what will be best case scenario. Any downside test of that 200 period, ignore that $23 region for now. We'll get to that on the daily chart. But any downside test of that 200 period, which is going to be moving as the month goes on, bulls, you're going to be looking for any volume on the retest, but a high volume bounce away from that level over the course of a couple of days. Really what the bulls have their eye on is going to be that 50 period. Again, specific to the 4-hour chart, the ideal scenario would be by the end of April, we've not only reclaimed that 50 period here on the 4-hour, but perhaps we've seen a back test on lower volume, so a higher volume pop through. Again, we're thinking macro, right? This is a monthly analysis, so we need to think of this on a little bit longer time frame. A pop through on high volume over a day, 2, 3. And in that time frame, we see a lower volume pullback back to the 50 period. Okay, with to follow shortly after that, a high volume bounce. What that does is that reclaims the level and confirms it with a big market sample size. What you really want to start seeing is an undeniable trend where the 50 period is trending slowly, sustainably upside, while the stock is doing so shortly ahead of it, with that 50 period just behind the stock, keeping that psychological barrier to the downside close but strong. Now, bears, ideal for you guys throughout this month. Okay, a downside break, kind of similar to the bull scenario with the 50. You guys want to break downside through that 200 period on big volume, but you're going to want to see a retest to confirm that. Again, ideally lower volume and then a high volume downside break away. While that's occurring, bears, we already see the 50 period flattening out here. Again, this likely looks different by the time you're getting into this video, but you bears really would want to see that all occurring while this 50 period on the 4-hour chart is curling downside and moving downside in an aggressive manner, because the ideal scenario is to get that 50 period below the 200. So not for the sake of the crossover itself. Okay, I think the death cross mentality, I think it's overhyped, but simply for that quicker moving psychological barrier kind of ceiling to move downside with the stock. If you are a bear, that's what you'd want to see. Bulls, that's kind of the opposite. That's kind of what you wouldn't want to see. Okay, it's important to understand both sides. Arguably, I would say more important to understand the quote-unquote enemy psychology over your own, over your peers, really. Okay, now let's move on to the daily. This is where we will draw the price levels. Okay, technicals and psychological levels. Technical levels almost always become psychological levels, and psychological levels almost always become technical levels. So we're really looking for both. Now, throughout the next month, okay, you can see I already have drawn that $23 region, this 2130 region, which of course happens to be aligning at the time of this recording, with that 50 period moving average here on the daily. One level I do want to add to this before we talk about this is going to be this region here, kind of this 2550 range. Remember, it's never going to be an exact penny. It's always a range, and that 2550 region has become a technical region and is likely to become a psychological region also around that $25 a share round number psychological region. So I'm really watching 25 to 25.50 over the course of the next month and throughout April here, but bulls, 23 would be an ideal hold here. Okay, because a breakdown side of 23 is really what the bears are going to need here in the short term to set us up for a downside move toward that 2130 technical level. Okay, and with this 50 period, this 50-day really moving average, moving upside so aggressively, heading into April, we may see that higher than 2130. It's actually quite likely heading up toward 23. So bears, you guys are going to want to see a downside break through 23, heading down to 2130, but in the meantime, cracking down below that 50-day moving average here on the daily chart because everybody's watching that. I expect to see a little bit higher volume around that level if we were to see a retest at all. But a downside break of that 50-day is really kind of like the ultimate goal here for bears, but not just a break for like a day. Right, I'm talking a downside breakthrough on bigger volume, and then I know it's a little bit of backtracking bears, but a little bit of a retest and then rejection on big volume. That's ideal. Confirmation's important. But bulls here on the daily, the goal here throughout the next month, throughout April, would be to see that 50-day moving average continuing higher while we hold off that $23 region, a break downside, I mean, holding that off. Allow that 50-day to get up through 2130, up above ideally $23 a share, while the stock bounces back up toward 25, 25.50, claiming the upside of that channel, 25.50, and we can use 25.50 then as a potential trampoline once we get comfortable above that level to kind of push higher on decent volume through that recent high of 27.50 and up to that $30 psychological region. Whereas you bears, a downside crack of 23 sets us up for a downside move toward that 2130 and 50-day moving average. And a break of that really sets you guys up, putting this thing back potentially in the teens, which is your goal as a bear to try to discourage as many bulls as possible. Whereas bulls, a crack of 25.50, a crack upside through 27.50, that's going to be how you bulls discourage as much bears as possible. So wherever the stock is currently when you're watching this video, this is all still going to be applicable because these are all bird's eye view, big psychological and technical regions that are still going to be applicable for the next, 6 weeks, all through April. Now, implied volatility is something we need to look at here, and then we'll look at the weekly chart, and then we'll move on to the bias that we can pull out of the chain. Implied volatility compared to the last, year or so, is actually sitting in kind of the lower, some may argue in the short term, mid to lower. I would say lower compared to the last year or so, but in the last month we're maybe mid to slightly lower region. That shows a certain level of comfort from the options traders. You're not seeing the options traders price in quite as much volatility, quite as much uncertainty as they have been over the course of the last year on average. And the lower IV goes, the more favorable conditions become for options buyers to step in and purchase contracts. Now, let's quickly take a look at the weekly. I mostly want to look at the volume profile here. We can see that, of course, after this last earnings, we had a big week of volume, a big green week as well. Take a look here. The next earnings are going to be May 6th, so nothing throughout April in terms of earnings. But what's really interesting is we've seen elevated volume on average over the last year or so, and since about May 1st, that week starting May 1st, 2023, so almost for the last year here now, we've basically seen up move, consolidation, up move, a little bit of a pullback, consolidation, up move, and now a little bit of consolidation. Throughout the month of April, bulls, I would love to see that continue, getting up through 25, ideally like 27.50. That would be a great up move, and then consolidation, though, being that 25 on its own is a psychological level, a very important one in a stock that's priced in the way Palantir is in the 20s, right? 25 is a big psychological region. I would not be upset to see Palantir from a bullish perspective get above 25, 25.50, being that that's a technical level, and just consolidate up in that region, kind of creating a new shelf that's sort of grinding higher. Bears, you guys are really going to want to see over the next, through April, not that these shelves have been perfect by any means over the last year, but a break of trend would be a great thing for you guys to see this month. A downside crack of maybe 22.50, 21.30, heading down back toward 20 would kind of crack that trend. We saw a little bit of that heading into the end of 2023, but just kind of another repeat could buy the bears a lot of time in discouraging some bulls. Now, let's take a look at the bias out of the options traders for really since the beginning of the year. Take a look up top. This is the put-call ratio on Palantir. It's currently sitting at 0.75. Now, as that line rises, okay, understand here, anything above 1.0 is more puts being purchased than calls, and anything below 1.0 is more calls being purchased than puts. So since the beginning of 2024, this has gone up from about 0.6 up to now 0.75. It's kind of consolidated out. We topped out at 0.79. And remember, this put-call ratio is measuring in terms of open interest. So this is not necessarily like daily volume, okay? This is contracts that are out there working, out there in existence, open interest. So since the pop in earnings, we have seen some more puts being put out there to work comparatively, which is causing that ratio to rise, but still 0.75, 0.76, we're looking at a call-heavy open interest ratio still here on Palantir. Again, little reminder, 1.0 is even in terms of open interest between puts and calls. Below that is call heavy. Now, to finish this off, let's take a look at the expected move from the options chain. Take a look here. Now, if you don't know what expected move is, it's a legitimate term. It's a technical term from the options chain that prices in how much volatility are the traders expecting based on each expiration. So we look here, the last expiration in April 26th. The traders are expecting a plus or minus $3.14 move. So if we take a look at the chart, and let's look at the daily for this. Okay, we'll zoom in a little bit. A $3.14 move by about the end of April is what the traders are expecting. Now, there's opportunity here if you disagree with that. Just hang on here. To the downside, that would put the stock somewhere around, if they were right, of course, which of course they're rarely going to be spot on, but that would put it right around 2072 to the downside. To the upside, that puts us right around 27 bucks a share. Okay. Now, for example, let's say that you think that by the end of April, the move in Palantir is going to be greater than that. Well, then that would be a fundamental, well, I guess that would be you fundamentally disagreeing with the implied volatility that the traders have priced in, which opens up the opportunity where if you do have a directional bias heading into the end of April to maybe put on some contracts that would, purchased contracts that would benefit from IV implied volatility expansion. You, of course, have to be directionally correct as well, but IV expansion would also benefit you if you think the move is going to be greater than that through to the end of April. Now, understand that expected move is not a directional bias. It's simply how much volatility are the option traders pricing in, which is an important aspect that goes along with the analysis that we've done, the put-call ratio, which is a bias, and then all of the important levels, the volume profile, all those things come together and help us form a directional bias. Listen, I really hope that this analysis video has helped you to do so. If your goal is to try to expedite your process of going part-time, maybe even full-time as a trader, I think you'll find our Roensch Capital Gold server extremely valuable. I'm in there every day working not only with the Platinum one-on-one members, but also sending out my personal scalp setup alerts, my daily in-play stock alerts, human-verified unusual options activity, swing trade setup alerts when they come around. That link in the pinned comment will allow you to get grandfathered in at the current rate. That makes you kind of immune to future price raises. And listen, if you got value out of this video for free, please subscribe to the channel. I appreciate you, and I'll see you in the next one.